Now temple money will go to the stock market. Is this the right decision? Have you ever imagined that the temple where you offer donations could soon echo, not just with the sound of bells, but with the bells of the stock market? Picture this. The Sam donation plate where coins clinked in devotion, now becoming capital invested in the ups and downs of Dalal Street. This isn't just an economic decision, it's a revolutionary shift in how India views tradition, faith, and the management of public capital. The Maharashtra government has made a historic move that could not only give temple trusts a new financial boost, but also integrate religious institutions into the investment economy. But with this bold new path come serious questions. Does this increase financial risk? Can the union of faith and finance prove to be stable and sustainable? Today, we'll dive deep into this very issue. But before we begin, if you're new to our channel, don't forget to subscribe so you always get the latest updates on our videos first. So let's begin today's discussion without any delay. The Maharashtra government has taken a bold step that challenges decades-old tradition. Now, public trusts across the state, including temples, mosques, gurudwaras, churches, charitable schools, social organizations, old age homes, and orphanages, can invest up to 50% of their total assets in mutual funds, bonds, and the stock market. Think about it. These are the very SAM trusts that, until now, operated within the confines of fixed deposits and post office schemes, which were long considered safe. But with changing times, even religious and charitable trusts are being encouraged to embrace modern financial tools. This transformation is rooted in a directive issued by the Charity Commissioner of Maharashtra. It isn't just a green signal, it's a formal guideline that clearly caps investment at 50% of the total corpus of the trust. It also lays down specific rules to ensure transparency and accountability in the types and methods of investment. In short, this doesn't mean that temples will recklessly plunge all donation money into the stock market. There are built-in safeguards and oversight mechanisms that the government itself will monitor. Now the natural question arises, why was this change needed at all? The answer is simple: to ensure better use and growth of funds. Today, many religious trusts are sitting on crores, even billions, of rupees, lying idle in low-interest bank FDs as rates continue to fall. If managed properly, this capital can be redirected towards social welfare, education, healthcare, and serving the underprivileged. And that's the very idea behind this landmark decision. You might be surprised to know that the number of registered trusts in Maharashtra is over 5 lakh. These trusts hold an estimated asset value of more than 2 lakh crore, which includes cash, immovable property, and other resources. But a large portion of this remains idle, generating very low returns. Now, as trusts move toward modern investment instruments, not only will their income increase, but the quality and reach of services provided to society could also double. This step is also big news for the financial world. A new and significant class of investors, religious and social trusts, is about to enter India's mutual fund and equity market. This will bring stability to the market and expand the scope of investments. At the same time, these institutions will now be able to invest the dividends and returns from their investments into more public welfare activities. This change will not only ensure the proper use of capital, but also move trusts towards self-reliance. However, the government has also ensured full transparency and monitoring while implementing this. The Charity Commissioner has stated that every investment must first be registered and must demonstrate that it is in the public interest. This means no trust can invest in risky stocks just out of greed for profit. They must show that their money is secure and will be used for public welfare. Moreover, the government has also stated that any trust not complying with these rules may have its registration cancelled. Now let's talk about the people. When devotees make offerings at temples, their intention is to support worship, community meals, cow shelters, and helping the needy. In such a case, if that very money ends up being invested in a stock market company, what effect will it have on people's sentiments? This is the biggest emotional aspect currently being debated. The government says the money will be invested safely, but explaining to people that their offering has now become an investment won't be easy. However, if presented in the right way, this change could be revolutionary. Imagine a temple that previously earned only 20,000 per month from a 5 lakh fixed deposit. Now if it invests wisely in mutual funds and earns 50,000 to 60,000 instead, where will that extra income go? Clearly, to a child's school books, an elderly person's meals, a poor patient's medicine, or the maintenance of a village cow shelter. And that would be the real victory, not of capital, but of compassion. This change won't remain limited to big temples in cities like Mumbai or Pune. Thousands of small temples, trusts, and institutions in cities like Kolhapur, Nashik, Sangli, and Nagpur will now be able to utilize their funds more effectively, especially for those organizations that were so far dependent on government grants or donations. This decision could become their first step towards self-reliance. If they seek proper investment advice, follow the rules, and maintain transparency, this initiative could become a model for other states as well. And that's exactly why this decision is not just a state policy. It represents a shift in national thinking. Maharashtra has taken the first step, but now the eyes of other states are also set in this direction. Will Tamil Nadu's temple board adopt this model? Will the trusts of Uttar Pradesh move toward this investment structure? Will states like Karnataka, Rajasthan, and Gujarat take this risk or stick with tradition? These are the questions now being raised across the country. Meanwhile, economic experts have praised this move. They believe that the proper utilization of trust funds can make India stronger socio-economically. According to them, if investments are made prudently and the government ensures proper oversight, this model could work like pension funds or investment trusts. It could also promote financial literacy and self-reliance in rural areas. However, not everyone is convinced. Some religious organizations argue that linking capital with places of worship compromises the sanctity of faith. They believe that devotion and profit cannot be viewed together. They ask, if an investment incurs a loss, who will bear the blame? Won't it damage the dignity of the temple? These are not easy questions to answer, but it is the government's responsibility to build trust without hurting public sentiment. That's why the Maharashtra government has made it clear that this policy is completely voluntary. No trust is obligated to invest in the stock market. It is simply an option for those trusts that wish to proceed wisely and with expert guidance. The government's intent is to integrate religious trusts into the modern financial system, not to commercialize them. This rule has been created with that very spirit in mind. Now that the policy has been implemented, it will be interesting to see which trusts take the first step.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.